What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at a critical moment in time for Bitcoin. So we are currently sitting right at $20,000. And I'm going to show you a trend that Bitcoin has been building for nearly a decade at this point. And this trend has continued on into this cycle. And right now, at this moment, we are sitting right at a critical juncture for the price of this asset. And I'm going to show you why in this video. So if you guys like this type of content, hit like and subscribe. You could also head over to the Discord channel to sign up for the DCA Index Risk Model. This is a machine learning algorithm model that I've developed, which helps you identify where both market cycle peaks and bottoms occur for this asset class. So we have this model for Bitcoin, Ethereum, and most of the top altcoins. So this model is completely free. It's available to sign up for on the Discord channel. We also do a lot of macroeconomic discussion on the Discord channel, and we discuss all of the cryptocurrency asset class. So you're welcome to head there and sign up. So with that said, guys, let's do it. So if you guys are new to this channel, we don't necessarily do a lot of technical analysis in the most traditional sense on this channel. We do look at a lot of on-chain analysis, which broadly speaking is technical analysis. However, realistically, on-chain analysis tends to be more fundamental focused because we're looking at the metrics of the asset. We want to know what's going on under the hood of the asset. And so we're just kind of looking at the data in that way. But in this video, I want to show you a very basic concept of technical analysis. And these are just long-term trend lines. And I'm going to show you why these trend lines are so important for Bitcoin and why, especially at this moment in time, we are at one of the most critical junctures of this asset class, and why right now we are teetering on the edge of entering into a new paradigm for this asset class. Because if we drop below the level that we're sitting at right now, I do believe that you're going to see a very difficult time ahead for Bitcoin and for this asset class as a whole. And I'm going to show you why that is right now in this video. So the first thing we're going to do is we're going to look back to the COVID capitulation event. And I'm going to just draw you a trend line here. And we're just going to build upon this because, I think a lot of people thought that the COVID event really didn't necessarily have much to do with the price of Bitcoin. It was just a random event that happened for a very short amount of time, and ultimately that it was very inconsequential. And I'm going to show you why that could not be further from the truth in this video. So what I'm going to do is just build a trend line here. So we're going to start by, first of all, in order to keep ourselves honest, we're going to put the magnet on and we're going to make this line extend as far as it can go left and right. And this will just make it so that we can't cherry pick the data. We can't draw the line to make it fit what we want it to fit. We're just going to pick a point here at the low of the COVID event. And then we're going to just draw this line right here to exactly where it would transect this bottom of this chart as we started to head into the bull market of this cycle. And you can see that as we traveled directly up this path here, this is where we held as support as we crashed down from May of 2021. Elon Musk tweets, China bans crypto, and we come crashing down. And where do we hold as support? You see that we held this line perfectly as support until we crashed below right here. And what happened to this line then exactly? It became our exact resistance level for the rest of the market cycle. So you see that all through August, all through September, we rammed into this line right here. And then when we came up and made this high in October, and then as we approached it again in November, this was the line in the sand right here. This line that we formed all the way back here, this line that many people thought was going to be extremely inconsequential, this line that we formed right here in the second week of March, and that we held as support right here in October, okay? So you'll see that this line essentially formed the line in the sand between the two stages of the bull market. So we had the early 2021 stage, then this summer bearish stage of the market, and then we hit this level as resistance into the later stage of 2021 before the market finally crashed. So what we're going to do then is use the same anchor point using the COVID capitulation event, this low that we made right here. And what we're going to do then is draw the trend line that was formed from the COVID event to the next bottom of our cycle. So the next bottom we made was right here in July of 2021. Okay. And so when we draw that line, what happens? Well, another fascinating thing occurs. This was the level then that we held as support right here in September before we bounced up to our high. And you'll notice that as we come from where the market started to crash here in the beginning of December, this was the level that we crashed below right here as we moved from the bull market and started to officially enter into the bear market as we went all the way down to 42K. It was at this exact level that formed from the COVID event to right here in July when we made this low in July. Okay. So far you're starting to see a story unfold now. This anchor point that we made back here at the COVID capitulation event and then used as a springboard into the bull market in late 2020, this was the level that then we used as resistance and could not break above as we went all the way up to 67, 68, nearly 69K. All right. Then when we used this bottom that we made in July during this bear stage of the market, this was the point that we crashed below as we went into this next stage of the market. So what we're going to do then is we know that we crashed below. So this became a new area of resistance. We crashed below and then we made these lows right here. All right. So let's draw that line now. And you'll see that what happened? Well, this level, this exact level from when we formed this bottom here before we went on this rally, formed our level of support that we used all through this rally where we went from right here at 32K all the way up to 48K. This exact line was the line in the sand that we held as support until this day right here on April 11th, 2022. We crashed below it. And notice one common theme here. When we come down from this line, when we crash through it, it's always a dramatic break to the downside. So it's not a small move. For instance, right here, this area of support that we had, we went from on one day, 53K all the way down to 42K. And then when we came back, we hit this level as resistance and could not get above. And then again, when we finally made a close below this line, what happened? It was a dramatic close. So we went from 42K all the way down to around 39.5. All right. So we hit this level and this level now became our area of resistance. So when you go below, it changes from being an area of support to a new area of resistance. So our new level was right here. All right. So this is this 25.5K level that we formed all the way back here on May 11th. So let's see what that did now. And it's the same thing. When we came down to this level, we crashed through it. We exploded down through this level. All right. And this is where we started coming down and then we exploded down all the way down to around 17.6K. So obviously that, and just to reiterate, these are all using this COVID capitulation event as a point of reference to draw these trend lines. So this COVID event has actually been incredibly important, even though a lot of people thought that this point in time ultimately was not going to be significant. So finally, now we make this point at 17.5K and what happens? So we're going to draw our next line from right here at the COVID capitulation event. And remember, we're not cherry picking any of this data. All of this data is drawn directly using the magnet, and we're just going from the low of the COVID event to the low of where we're at right now. And what you'll see is that this level right here, this level from COVID to this low at 17.6K is now acting as our area of support, and we're sitting right on this zone. Okay, but I'm going to make an argument in this video and show you why this level right here is more important than any of these other support levels. So, like I said, we have these areas of support, these lines either form areas of support or resistance. When you're above them, they're support. And then when you break below, they're resistance. So we have this area right here that acted as an area of support and then eventually resistance. For quite a long while, it acted as resistance actually all through late 2021. Then we have this area here that acted as a strong area of support until we broke below here in April. Then we have this area that we went crashing below when we went far down, all the way down to 17.5. And now we're using this line as an area of support. And I'm going to show you why, if we lose this level, Bitcoin could potentially, and the entire cryptocurrency asset class for that matter, could potentially have a very long and trying road ahead of us, because this level is the most important in my opinion. So if we take these other levels, if we take these levels and let's extend the line to the left, okay? So we're going to extend all of these trend lines just off to the left, so off into space. So we're going to look at those three levels first. And you see that those really form no specific continuation with prior trends that we've made. So specifically, I want to focus today on the one that we are at right now. So I'm drawing the trend line that continues from COVID to where we're at right now. And interestingly, this trend almost perfectly transects right through the low that we made right here in August of the 2015 cycle. So we hit this low in August of 2015. And where does it extend through? It extends through this level right here, right at around $32, $33 in February of 2013. So what's interesting about this level then? So we know that it hits the low of the 2020 cycle, it hits the low of the 2015 cycle, and then it comes through kind of right at this inflection point in March of 2013. So we know that this trend line is passing through right at around $32, $33. What is important about that level? Well, that level was actually the prior all-time high in June of 2011. So this marked the beginning, the true beginning of the bull market, where you're passing your prior all-time high and going in and making new all-time highs back in 2013. So this level that we're hitting right here at around $32, $33 is an important critical point in Bitcoin's progression. It's a trend that is 11 years in the making now, something that started all the way back here in 2011 and continues to this day where we're at right now. So if we were to drop below this level, I do fear that Bitcoin is in for a tough time ahead. And, you know, this isn't necessarily anything to do with Bitcoin and its fundamentals. What it has to do with is the massively negative economic environment that is forming around the cryptocurrency asset class. And this is something that we have been talking about, you know, dating back to the end of 2021. We have been talking about this entire time, that when people tell you that, you know, people are making worst case scenario videos. Go look at people's worst case scenario video. First of all, they're on their fourth worst case scenario video now. And why is it that they have to keep revising what they said in the past? And that's because they don't want to be honest with you, or they simply aren't knowledgeable enough about the market and the economics surrounding the market in order to give you the truth, in order to give you useful information. And the bottom line is, we are sitting at this pivotal level right now for Bitcoin, and dropping below this level sends us into a new paradigm shift, because we've essentially, if we break this level, we have extended into a new low that Bitcoin, you know, dropping below this trend line that Bitcoin has not seen in going on 10 years now. Okay. So I think when you consider all the factors involved, we have to watch this level like a hawk in order to see if we start to get closes below this level. So if we see a crash below this level right here, you know, we went from 20K all the way down to 17K, like we've seen with some of these other crashes. And notice that typically when you do go below one of these trend lines, it is in dramatic fashion, right? Like we saw previously here. When you go below these levels, it's not typically a subtle thing. You typically go crashing below them. So if we just quickly look at this again, you know, we crashed below right here, and then again we crashed below. It's always a very dramatic event when we end up going below these levels. So this COVID event has actually been much more impactful than I think a lot of people give it credit for. And ultimately, I think where we're sitting at right now is going to be a critical point in time for Bitcoin. So, our options from here are going to be one of two things. And that's we get a bounce off of this level and we end up saying that, yep, Bitcoin held this long term trend that we've been on, that we've been forming for 10 years. The other option being we come crashing below, and then that sends us essentially into a new paradigm for this asset class. And why is it forming this new paradigm? It's not necessarily anything to do with Bitcoin, like I said. It's only to do with the macroeconomic environment surrounding Bitcoin. So we're talking inflation. We're talking about massive levels of debt. We're talking about a potential energy crisis in Europe. We're talking about the Fed tightening the bond market, pulling $100 billion a month out of the bond market, the Fed raising interest rates 75 basis points at a time, while a lot of these other channels are telling you that, they're up against it at this point and they can't possibly raise rates any further from here. And they can't. These people don't understand how these things all work on the grand scale. They just parrot the same thing over and over and over and over again, and they're verifiably wrong. You're seeing that a lot of the information you're being given by these crypto YouTube channels is just verifiably wrong. They're getting a lot of people really into bad positions, and they've been doing that ever since calling the max pain levels at 56K for Bitcoin, sniping Solana at $180 or whatever it may be. So you guys have to look at where we're at right now, and you have to consider the fact that if Bitcoin goes crashing below this level, we do have some positive news right now in terms of what's happening with Ethereum. But, you have to imagine, if you look back at a lot of these network upgrades, typically what we see when a network upgrades is there will be some hype going into the upgrade itself, but then ultimately we see a sluggish market after the upgrade goes through. Okay. So I think we're going to be looking at one of two things here. We either bounce off this level or we get a crash below it. And, I really don't believe that it's just going to go necessarily sideways and just calmly through this level. You haven't seen it do that once before. And I don't think when you're up against a trend line that's been, 10 years in the making, there's any reason to believe that this is the unique circumstance. If I show you that it looks like a duck, it quacks like a duck here, 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 and here, and it exactly acts in this manner every single time, what evidence do you have to believe that it's going to act differently at this point in time? So we need to be aware of the broader situation, guys. I'm speaking in somewhat harsh terms in this video because, if we come crashing below here, I think that we could be in for a really tough time ahead. And, my goal on this channel is honesty. My goal on this channel is to give you a fair evaluation of the market. My goal on this channel is to help you understand what's going on from a realistic, I'm not trying to be overly bearish, but when the situation is bearish, it's simply the stance that we have to take. And it's the stance that I am taking right now until evidence proves to the contrary that, we aren't up against it at the moment. But everything that I'm seeing, everything in terms of the economic picture, in terms of all of the on-chain data for the crypto market, across the line, everything looks bearish at the moment. And oftentimes that may be the best time to be buying in. But nonetheless, I don't think that you can just jump in headlong at this point in time and say that now is the bottom and we are ready to go up from here, especially as it relates to Bitcoin, as I'm showing you that we're sitting at this critical juncture. So ultimately, if you want to keep getting into the market, I do believe that dollar cost averaging in is still your best approach to enter the market. It's what I do. And, if we do go crashing down, I think it will be a buying opportunity, but you have to have a long enough time horizon. If you are expecting that we go crashing below right here, and then within the next 6 months, we're on the way to the moon, up to new all-time highs, I think you're fooling yourself. I think there are a lot of dominoes that need to fall first before this market can get turned around. Now, with that said, I could be completely wrong here. I could be the fool in this video. I could be the fool that I've been calling out, these guys calling out for 6 to 8 months now, saying that these guys are out of their mind, telling you that we're making a turnaround right here as we're heading down, as the on-chain activity looks like crap. These guys have been telling you we're going to new all-time highs. And, one day they're going to be right. Ultimately, one day they're going to be right. I just don't, in particular, believe that today is that day. I do not believe that. But with that said, one day, I could be wrong, and maybe they're the ones who are right, and, they're laughing at me, or they don't even know who I am. So what's it matter, right? But if you're watching this channel, I want you to, I'm not trying to scare you out of the market, but I'm trying to give you a sense of realism, a sense of what you may expect going forward. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.